Morning, everyone. Happy Cyber Monday, happy normal Monday, happy back to work Monday. Hope all is well. Hope you recovered from the Thanksgiving, eating, celebrating, shopping, shop to your drop, whatever you've been doing. Glad to have you on. Hope you're having a fabulous start to your week. And yes, we have been going through hell and back in the crypto space because literally everything seems to be burning down. Are we really in hell right now? It depends on your perspective, as it depends on the positions you have, if you're miner, trader, hodler, and so so many things happening. So I'm gonna get straight into it. I'm gonna it may take a while for me to see who's online with us, but thank you for joining us, guys. And yes, it has been even I don't know where to start, because I know we've been sounding like a broken record, and I know we've been saying for the longest that where we are right now in the market, we are going to see people at some point capitulating, and stats do bear this out, that during periods of fear and capitulation, people start making irrational decisions. But a lot has been going on, and with price going down, I mean, we've seen a further decline in the price. I think it went as low as 3,400 and something at some point, which Aking will touch upon that before recovering slightly. So a lot has been going on, but it has been struggling to try and get above that 4,000 mark, and investors have been concerned with several issues going on with crypto specific events, and also intense regulatory scrutiny as well. That hasn't helped matters. And this has just been an crazy time, and the traditional markets haven't fared better, although there has been a bit of a comeback, a little bit of a recovery there, but still everywhere you look, markets are jittery. So a lot of uncertainty going on. And obviously markets don't like uncertainty, investors don't like uncertainty. So where we are right now, and coming up to the holiday period, if you remember some of the predictions, some of the forecasts for the where we may see Bitcoin's price, where we would see crypto market cap by the end of this year. I mean, we still have a month left to do, but unless there's some sort of miracle, some sort of catalyst, something to be able to get the price back, to instill some sort of confidence, and to try and reverse some of the negative sentiments in the market right now, I don't see how, me personally, I don't see how we're going to be back at where we were before, above the 6,000 range. So this is, especially with the delays with back, some of the delays in the launches, with some ICOs as well having to review their strategies in light of what the SEC has done with the crackdown on them, and it's just been a crazy time overall for the markets, for investors in particular. So yeah, it's been absolutely, I mean, what can we say? I mean, it speaks for itself right now. Wherever you look, it's it's fully in the red, isn't it? However, there is some hope. I will discuss that in a few moments. But the fact that it's been down 80% since its all-time high, close to 20,000 back in December. Also the one of the things that we were looking at was the hash rate during the extended bear market. Despite that period of time, Bitcoin's hash rate was actually increasing. But what happened was, with the Bitcoin hash rate wars, a part of that hash rate controlled by Bitmain, and with the Bitcoin fork, they did use some of those hashing power to divert it from Bitcoin to Bitcoin Cash. And that, although that has now died down, they've called a truce and moved on. Specifically, Craig Wright's Satoshi Vision have put the white flag up, because, you know, both sides, I think they lost something like $10 million. So they ended up being the casualties, the losers of that war, of that civil war. But investors have been looking at this from the sidelines. They have not been impressed. And on top of that, the SEC taking proactive approaches to come down on the market, on the exchanges, on the ICOs, against individuals. It's been a manic ride, to say the least. And we knew, based on some of the announcements from earlier this year, that, you know, the regulatory framework that investors have been waiting on, that was going to, they were formulating it. They had national and international meetups where you have major economies coming together to try and formulate a plan. Now, we've been talking about this, you know, for quite some time now. We probably sound like a broken record to you by now. But all these combinations and the hope and the expectations of ending on some sort of reversal, some sort of you know, some sort of turnaround, something to give the market hope, something to give us an idea of where we'd be heading by the end of this year. It's you know, that they've actually, funnily enough, because of some of those incidents in the crypto space, they became everyone ended up losing out as a result of that. I mean, the whole point of being in this community, in this space, is to, like, we have bigger fish to fry. If you're going to be moving with the ethos of what decentralization means, and in the crypto community space, allowing these outside forces to come in from the traditional space and be able to suck the wind. I mean, especially with the price manipulation, it's been absolutely crazy on that aspect. But then we hear about all these developments happening, and it's like, who do you trust? Who do you listen to? We see what they do. We're seeing all these filings. We're seeing all these reports and developments and announcements and so on. And here we are. We are at the market. We are at the point in the market, stage where we're about if we haven't entered capitulation, and I wouldn't say it's despair yet. I think there's a lot more pain to be felt, not financial advice before. I mean, it will get worse before it gets better, in my opinion, but we're seeing from how things are moving, price point, which I know Aking will touch upon later. This has been something where the market, either way, we'll have to have strategies in play to be able to you know, go through this journey, because it will, unfortunately, weaker hands are being shaken out if they haven't already. It's about to get worse from what we can see, and those that have promised to hold on to their positions, those that have decided to accumulate at this point, or dollar cost average. This is the part where, you know, we've been waiting for months on end for something to happen in the market, because it's been going sideways. It's been ranging for quite some time, and now that we're in play, we're in the heat of the battle, we're in the kitchen, and it's time to execute, time to whatever strategies we have. This is where we get to decide what to do moving forward. And you know, things move really once in this market. We're seeing once it makes a move, breakout or breakdown, once it makes some moves, it's violent from what I can see, pretty violent, blood in the streets and all that, even if though that blood is still some of it is your own. So this is where we, first of all, we have to get our mindset right, and second of all, we have to have our strategies that we have been planning, preparing in place and executing at this point. Now what's interesting is some of these announcements have been coming up and there have been delays upon them from some of the big players. I think, in my opinion, that's coinciding, and it's been, I think it's been deliberately timed, because some of the things that they've been saying, they've had the whole year, they've had plenty, in fact, I would say it's beyond a year, before they came in and made the announcement that they were interested in going into cryptos, into blockchain. They've had a period of time to research and really scope out the market. So and to develop strategies and forecasts, and they probably have different models, business models that they can apply and adjust, as this is very volatile. It's a new market, it's a disruptive technology. So they're really weighing up their risk to reward ratio. And even in the business side, there is a fear of missing out, by the way. There is FOMO. So they feel if they don't take opportunities in the blockchain space, in the crypto space, as and when it's presented, and especially if they're seeing their competitors jump on board and they've been successful with it, they feel they cannot afford to lose that opportunity. Especially if they're in markets and industries where the margins are tight, hardly any room for any error, or have any luxury. It does depend from industry to industry. With some businesses, they do have monopolistic advantages, and some they just cannot afford to do it if they cater to price sensitive price sensitive customers. They're going to have to find every which way to try and cut costs and boost profits. And so it does depend from business to business, individual to individual. As I keep saying, it depends if, as a stakeholder, what your interests and motives are in this space. But one thing we know, whatever the price does, wherever we are in the market, you have to have some sort of strategy, be prepared, and ask yourself how low, what's your pain threshold? What is it that you're willing to lose? What is it that you're willing to endure? What kind of suffering are you looking to endure? The sacrifices you're looking to make. So with businesses, they have very clear margins that they have to work with, that they will not even contemplate. If this industry, if this technology was just something that will get them to cut costs, boost their clients, if it gives them even one powerful advantage, that is enough for them to take a look and consider. That's something that they're willing to do. And we've seen this bear out, by the way, with the heavy interest that businesses have in particular. And we know with retail investors last year, a large majority of them that were not educated in this space, they just jumped in onto the bandwagon, and that is typical of market psychology as well. When we see price go up, and we see people that we know, friends, family, colleagues, they've been trading cryptos, invested in cryptos, and they're recommending friends to invest in it, and then they jumped on board. We saw what happened last Thanksgiving. People were around their table excitedly talking about cryptos, look at my investment. And in fact, they gifted cryptos to their friends and family. And then you had Christmas. So that whole period of time when retail investors were pouring in, and a large majority of them not fully educated about the space and the risks attained with it, there's a lot of hype and euphoria around that, and talks of it going to, when we saw it hit 20, 30, 40, 50, 70, we were hearing all sorts of crazy numbers. And who would have thought, here we are today, Bitcoin struggling to go beyond that 4,000 margin. And since then, that 20,000 to 4,000, there's been so many blockchain patents filed, so many developments being posted and reported and so on. But we're seeing price depressed. Price had collapsed because it had shaken out weaker hands, and there has been some of it has been to do with the fact that in these cycles you do get in different stages, you do have different for example, people that are looking to make a fast buck, they're in and out of the market, they're not really in there for the technology. Some people that are in for the technology and they're holding and are aware of they believe in the technology and the project and so on. But those that are fully aware of where we are in the tech adoption cycle will have some sort of confidence and understanding that if this is going to bear out to its promise and to what it was originally intended to do, then, you know, where we are when you zoom out and you take a look at every advancement, any type of technology you look at in the last 10, 20, 30 years, and you see cryptos and blockchain as part of a trend, as part of you know, as part of a process in a tech cycle, tech adoption cycle. If we see there's similarities that have borne out, and yes, we know that certain conditions are different. For example, where Amazon and Facebook, Google, and even before the dot-com period, with Microsoft, with Intel, IBM, and so on, we've seen how, you know, these are disruptive technology. Who would have thought that we would have had a PC in every home? I mean, they were laughed at. Paul Allen and what's his name, Bill Gates, co-founders of Microsoft. They were laughed at to have a PC at every home, and now we take it for granted. We have a couple of PCs everywhere. In fact, we have devices of all sorts. We have tablets and so on. So, you know, we can get a larger perspective if you want to see, if you want to see where, if you want to have an idea and a perspective of where we are as an investor, if you're truly investing in tech, if you see this as investing in new exciting tech, then you're going to have that perspective, that large, not financial advice, but from what I'm seeing, there's this similarity in not only how they invest, but how they think. What mentality that they have, and unfortunately there's a lot of failure that goes with it. There's a lot of you know, depreciation in price. There's a lot of mistakes, and there's scams as well, as we've seen on the ICO space, as we've seen with different exchanges, but also there's security scares as well. But speaking of security scale, if I have time, I'm going to speak about CoinCheck, because they've actually decided, they have actually refunded the amount of cryptos that was breached, that was stolen. They've been able to refund the customers. So that is a bit of good news, but it's not really being felt by the market at the moment. And overall, with what we've seen with exchanges after exchanges, even though some of them had government warnings saying you need to beef your security up, some of them like Bithumb and CoinRail, so they really need to do more, given their you know, their size and their what do you call it, their level of scrutiny and where they are in the market. And so trust in this space is paramount. Trust is so important in regards to investor confidence and the sentiment of the market. But if we're seeing a lot of manipulation, if we're seeing governments trying to find ways to regulate and crack down and have, you know, official reasons, and then they might have the real reasons. That's what I mean. Whenever I whenever I see and witness different regulators and governments and different bodies come out and make announcements, I think, okay, this is the official line. And then the other part, I see what they're doing, and I try and figure out what their real motive is behind that. Is the reasons, is the cause, is the motives and the thinking behind that? What is it? What's in it for them? What benefits them? And that's, I try and think of it from that point of view as well. Even though at some point it may give the market some extra confidence and try and somehow influence the market and manipulate the market. I do see that certain things have been happening to try and there's been some sort of coordination on the government, on the regulatory level. And we have to be fair to the SEC, though. They did warn us, they did hint last year what they were planning to do. And so this year, they're towards the latter end of this year, that have been pushing forward with that. And some exchanges, some individuals have been caught out by that, and without acknowledging wrongdoing or acknowledging anything that would be detrimental to them. They just settle it. They don't want any problems with the SEC. They don't want a bad relationship. They don't want to taint that before they even get started on their blockchain projects, or if they're an exchange. They can't afford to spook their investors, because ultimately what the investors, how they move their money, where they move their money, and the trust in the systems, the technology, and their brand, ultimately the community will decide whether they're worth their salt, whether they're valuable, whether I could do business with this exchange. Can I trust them to temporarily keep my cryptos in the safest custody they can, while I have to buy and sell and trade and so on? These are the sort of questions, because you have to think about what's been happening. This year has been chock-a-block with crazy developments, and you would think, based on the developments alone, that Bitcoin and cryptos would have been at least like, with Bitcoin in particular, we would have thought that we would have passed the 10,000 at some point. We did, but then it returned down. But that $10,000 per Bitcoin, at least we would have seen the what do you call it, the total market cap increase, and at least double. But that's something where where we are, and I believe on Friday, I think it's the CME futures. What are we now? Monday the 26th. Time is flying by so quick, by the way. That's why I'm looking at my calendar. Friday, the CME futures expire, I believe, and so the market will be watching that. And so that we're coming to the Christmas period next 3 weeks from now. Also, the traditional markets will be slowing down at that point as well. So I don't, unless they're trying to bury some sort, I don't know, if they're trying to attempt to do some sort of turnaround or some sort of reversal, I don't expect it to be by the end of this year, because there's still some announcements and developments that need to be taken care of in the very first half of 2019. That has been scheduled. So I don't foresee this. From what I'm seeing as well, institutional investors are accumulating behind the scenes with over-the-counter trades, but I think there's going to be a lot more manipulation. There's going to be a lot more depressing and shaking out of the weaker hands, and it is extremely risky at this point, in my opinion, to try and I as that adage goes, to try and catch falling knives. It's best if you have some sort of strategy to, like, we can't time the bottoms and so on. So you have to have a strategy in place, and one of them could be dollar cost averaging, or being out of the market for now until we have some sort of reversal. But here's what's been going on, which I found really interesting. with what happened yesterday. So yesterday, what is it? I'm trying to remember. Wall Street Journal. So they came out with some development regarding Ohio. I don't know how many Buckeye residents that we have. I hope I said that right. Sorry if I mingled it. If you're from Cincinnati, okay, I know this. Okay, Cincinnati, Columbus. I know those because you know when you had the American election, when you have the electoral college votes and you wait for we have that in the BBC, by the way. We have that in the UK news. We actually have live coverage of you know, the presidential election. So the last one, 2016, you have the electoral college, and I remember that those particular cities, Cincinnati and Columbus, because they were calling out different cities and districts and stuff. So I remember those cities. I haven't been to Ohio, but I know it as the Buckeye State because one of my friends in Ohio mentioned that, and what do you call it? Cleveland as well, I'm aware of because of what do you call it? LeBron, the Cavaliers. LeBron James, former what do you call it? Former captain of the Cavaliers. So I'm aware of that. So anyway, Ohio, Buckeye State, has decided to be the first in the nation to accept Bitcoin for tax payments. Now, this may not be a big deal, but I'm gonna tell you why in a few moments. So, you know what? In a sea of red and a sea of craziness, there's still developments happening. It's still like, you know, no one in the crypto space has just decided to give up and die and that's it, like leave and stuff. There's still things happening on the ground. Some of them are being reported, some of them are not. But they decided, the treasurer decided to approve and be the first state as of today, starting from today. If you're a business situated in Ohio, you can now pay your taxes with Bitcoin. And that was reported yesterday, but it has fully come into effect today. Now, that's, I have to be clear, that's not federal, that's paying taxes to the state government of Ohio. And this is just businesses, not individuals, but they are planning to extend that to individuals. Now, here's the thing that I'm taking notice of is what businesses, because remember, they are motivated. I mean, what businesses have in common, they're motivated by their margins, motivated by the profits, the profitability and revenue and sales and customer retention, customer acquisition, and so on. Like real life business metrics that they can, you know, you have it in black and white. This is what we are at, and this is where we're projected to go. So in this digital age where we are, anything that could give business a competitive edge, anything that can, they don't make these decisions lightly, by the way. They don't take these risks. I mean, we're seeing on a domestic, federal level, international level, there's so many complexities that businesses, I'm not an expert, I don't quote, I'm not a financial advisor, so don't take my exact word when I say certain things. These are my opinions, but from what I'm seeing, and this is very common to international small to medium sized businesses as well, money talks. At the end of the day, we agree, money talks. Okay, it doesn't matter what currency it is. So the fact that now they're one of the first governments, the first state in the US to accept cryptocurrencies for paying of domestic taxes, for businesses, that is not individuals yet. The treasurer, Josh Mandel, he literally has a vision to establish Ohio as some sort of crypto-friendly, tech-friendly space. Now, we've seen some states trying to formulate their own policies and initiatives and tests and pilots and stuff to see if Bitcoin and cryptos and blockchain in particular is if it matches up to its hype on reality, whether their clients, their members, their electorates, their voters can actually get a benefit from this. So the ones that are deciding, regardless of what the federal position is right now, remember this is still not clear, still hasn't been established, although we are seeing the CFTC and SEC and other bodies looking to have their own, like they're already deciding to make moves. They're not waiting for bills to be passed. So the fact that Ohio decided, okay, this, I'm going to step back and give you a larger vision as well of where we are right now. We were talking about before about crypto-friendly jurisdictions like Malta, like Switzerland, for example, how specifically they're writing into laws, they're writing bills to establish themselves as crypto-friendly jurisdictions, nations, Malta calling itself the blockchain island, and so on. Now, with America, we know there's been some regulations, there's been some interpretation of existing laws, especially with what constitutes as a security, and some projects have been, some ICOs have been in trouble with that, and on the wrong side of the SEC. But we have also seen it stating that they didn't consider Bitcoin and Ethereum as security. So that's another aspect to it as well. Now, in this, in where we are right now in the market, and even before, before we saw the prolonged bear market, these governments from country to country, it varies. Some of the, remember I told you that certain countries, certain jurisdictions are motivated, do have their back against the wall, like Iran, like Russia, like Venezuela, facing sanctions, facing some sort of issue, some sort of problems with, whether it's with the existing financial system or some other political dispute. They're trying to reduce their reliance on US dollar and reduce the US, the American political influence on their economies, on their domestic policies, and how they formulate their foreign policies also plays a part with that. So the fact that now, what makes Ohio special? You guys tell me, especially if you're from Ohio, please let me know. I haven't been to Ohio yet. You let me know. But here's what we are seeing, and a trend and a pattern emerging, that they're opening their eyes to alternative markets, whether they've got their backs against the wall like Russia, Venezuela, and Iran, or whether they're simply being proactive because they're geographically small, and their influence may not be that much economically, politically, socially, like Malta. The fact that they can reinvent themselves again, they can rebrand themselves again, and perhaps they're just jumping onto the blockchain bandwagon because it's cool, sexy, it's in, it's hip, it's the cutting edge technology of the moment, and so on, and they want to be able to capitalize on that because they're seeing their potential clients, voters, investors, being preoccupied by that and considering that. So they're looking at where the money is going, where the ideas are going, where the inflows, outflows of that. And so in this context, they're looking to rebrand themselves, and they're trying to establish a more tech-friendly image. And as these days, as we say, we keep talking about branding, marketing, image, and with that, the core, the nucleus of that, to get that loyalty and that movement, that almost like that revolutionary, tap into that revolutionary energy, and be at the cutting edge of it, which is what Malta's trying to do, what Switzerland trying to do. each country has its own, or I shouldn't say country, it's jurisdiction. Some of them are not countries. They could be states, they could be islands and territories and so on. And this is why, like with a global tech, just take out blockchain and cryptocurrencies for now, but if you focus on any new emerging technology, whether it's successful or fails, long-term, medium-term, or short-term, regardless, their risk to reward ratio, their outlook, their mindset, where we are in 2018 going into 2019, and then they formulate their plans and their what do you call it, their strategies long term. You know, we're talking 10, 20, 50, 100 years from now. They want to be at the forefront. They want to be at, in a position where they're more profitable, more healthier, you know, less costs to bear, less sacrifices to make. What, you know, that there's no such thing as perfection. It's all to do with balancing your risk to reward ratio, and risk, balancing all these, mitigating all these different types of risk. And it's so, nothing is ever simple in technology, as I've been saying, and other people have been saying. There's going to be more so than not, there's going to, in technology, there's usually a higher level of failure rate. That's something that is consistent. If you look at the last 50, 100 years of technological development, people had to fail, ideas had to fail, you know, mentalities had to fail many times before we see success. Not saying every that's the cookie, you know, cutter method. There's no such thing as one fits all method. And this is where it gets really messy, really ugly sometimes, and it's just not for everyone. People, especially their mentality, they're not cut out to bear the bad times, and they come in when there's during the good times and so on. It's typical of human psychology to avoid pain and to you know, be attracted to pleasure. And people are they're motivated and pushed by pain more so than gaining pleasure. Now, so going back to Ohio, with that bigger picture in mind, Ohio, you know, I'm sure each 50 state in your country, in your nation, each of the 50 states have their own budget deficits. They have their own budgets to balance. And with increasingly, from what I'm seeing, the US is heavily indebted in the multi-trillions, and to try and find ways, and the pressures, the squeeze on ordinary people and on businesses, and this is excluding the 5% at the top and the massive conglomerates, the massive companies, the multinationals. I'm excluding them for now. I'm talking your average mom and pop, your local businesses, your neighborhood businesses. I'm talking about the ones real close to the grind, real close to where the action is at. They have an idea of you know, what's going on at the ground level. They're more in touch with their people, with their consumers, and they're more bespoke. They're more they adjust things to what's helpful, what serves the community. Those sort of businesses. With Ohio in particular, they're looking to make themselves not just crypto friendly, but tech friendly. Tech. So, and this recently, if you look at their developments, they've been trying to open up their state to attracting this sort of investment from businesses to come in and treat Ohio as the next place where they could really hunker down and do business locally, nationally, and internationally, because we are obviously in a digital globalized era right now. So so here's the thing, that they've got something like well over 20 different business taxes that they can pay starting from today. So for example, sales tax, oil, severance tax on oil, gases, withholding tax, tobacco tax, public utility tax. Remember, this is just businesses for now. And it's supposed to be quick and easy with paying their taxes with Bitcoin. And I know you might be thinking, okay, but it fluctuates, especially with what's been going on now. How is that going to work? So here's how it works. So businesses sign up with ohiocrypto.com. They can do it right now today. They enter their tax payment information, and they use a third-party processor called BitPay. Now, if some of you are familiar with BitPay, you may even also have the card that allows you to spend your cryptos and use it to pay for anything, for any goods and services. And BitPay is established with being a payment processor, changing crypto to fiat currencies. Now, so what happens is it goes to BitPay. BitPay then converts that the Bitcoin paid into US dollars immediately. And then it deposits the cash, the USD, into the state's account, into Ohio's treasury accounts, where they receive it for business taxes. And here's the thing. Here's what swings it for them. If businesses use credit cards to pay, credit or debit cards to pay the taxes, it's normally 2.5% when businesses uses credit cards. With BitPay, with Bitcoin, they only have to pay a minimum fee of 1%, minimal fee from what I understand. Now, 2.5% versus 1%, which one would you rather have? As a business, take out if you don't think of it as an individual, think of it if you're owning a business. You want to save costs. You want what makes financial sense to you, anything that can drive your profits, right? That could boost your profit, and anything that's easier to do as well. Now, some businesses have already taken the steps to educate themselves about Bitcoin, about cryptos, about blockchain. Some of them have done that. They've started researching. It may have been, the CEO, or it could be some other individual, or they may even have a department, R&D department, or some other department dealing with new changes, figuring out what changes that are in their industry, anything that affects their industry, or anything that makes their life easier, or any ways to save costs and so on. They're on the lookout for that, and they're willing to be open-minded and bear the risk of trying that new idea out. Okay, so this is what swung it for them, that argument that Bitcoin may, paying their taxes via Bitcoin may help them. Not only the 1% minimal fee, but here's the thing, as we all know, Bitcoin, cryptos fluctuate. And with Bitcoin in particular, it's not super fast. It's not as fast as Ripple. It's not as fast as certain other cryptos. But during that time frame, there's a 15-minute time window where the Bitcoin exchange rate is set. And it's BitPay that sets that. And during this time, when the price fluctuates, up, down, whatever, regardless of what happens in that 15 minutes, it's BitPay's burden, not the state's, and certainly not yours as a business owner. It's BitPay that assumes that responsibility, the risk of any market fluctuations during those 15 minutes. Now, that is what won the argument for them. Not only that, the costs are lower than standard ways to pay, using credit card in particular, of 2.5. That, imagine, like the difference may be nominal, like we're only talking about just a small amount. It's not, we're not saying 10%, 20% savings here. It's only small, but it adds up. It adds up. As a business with a going concern, you don't care if you're saving 10 cents or $10 or 10 or $100, 1,000. Any way you can get any sort of advantage, no matter how small, you want it in there. You want to make it more efficient, make it more what do you call it, more efficient and less costs to bear. So that's what set the argument, and they did reach out to the business community. In fact, it was the business community that was pushing this, and like in terms of when they were receiving feedback, it has been positive. And a lot of the, here's what's made me think is that we're seeing discussions happen publicly, but I'm always curious to hear what's happening privately. The discussions and collaborations happen privately, and that is a lot more harder to gauge. So one of the things we do look out for is what they do, not just what they say. And so this is one of those things where I thought, okay, if they can truly counteract some of the concerns with using cryptos for to settle not only taxes but any sort of payments in that issue with fluctuation, if they can truly, if they can negate that, if they can mitigate some of that, and they find strategies that work with them and it's acceptable to them, and they still have some sort of they have a competitive edge, they have some sort of advantage, the overall net gain that they get out of this, then of course they're going to consider it, contemplate it. It's there, literally, it's their it's at their core to be you know, the whole premise of survival of the fittest is in their DNA to always seek out you know, like when you target something and you seek to destroy, but in this time they're seeking to save. You know, they've got their crosshairs looking for different ways to save and different with it. If this wasn't working at all, if this had absolutely no bearing on any of their important metrics, if this wasn't any help by any way possible, they wouldn't even have the, not only they wouldn't have the discussion, they wouldn't even be acting and doing these things. And the fact that they're collaborating with the state, it tells me that there's some sort of interest happening on the ground level, especially where small to medium-sized businesses are concerned. This is where they can get a competitive edge and be able to relocate themselves to wherever they find it's best for them to be able to survive as a business, not just survive but thrive. And you know, because that has been a concern, is like what happens during that time when they, of course, you pay your taxes or you pay for something and the price of Bitcoin or price of cryptos go up or down. It may be to your advantage or detriment, but how do you get some sort of stability during that time of volatility, that window of payment, of transaction? So this is one way that they're seeking to resolve the issue. And the fact that one party has assumed full responsibility of that, BitPay, that tells me BitPay has done their homework. BitPay has decided to weigh up their risk and rewards and say, hey, you know what, we may be adjusting for losses here and there, but this is where we think we're going to make profits. And that's what they're willing to do, and what they've done, what they've gone out to set. And they've got partners in place now that are willing to rock with them. And so despite where we are right now in the bear market, we're still seeing some moves being made by small to medium-sized businesses, by in this case the first in America, with Ohio deciding to do that in terms of taxes. So but here's the thing, the fact that they said that right now individuals cannot pay with their taxes, but that's on their pipeline, that's on their plans to do, but they literally want to become the national leader with blockchain technology and with tech developments as well. And they said specifically being a leader with leveraging cutting edge technology. So, and also he said, Josh Mandel, the Ohio treasurer, said he did personally see Bitcoin as a legitimate form of currency. Now, of course, we don't have time to get into that debate now, but that's something where the fact that he decided to stake his reputation, stake his position, say, here's where I am, this is what I think is in the best interest of Ohio, and with the Buckeyes, and with the future, not just of Ohio. He's literally also saying, hey, 49 other states, look at what I'm doing. you know, and so he's you know, also acting as a what do you call it, a flag holder, as a leader, as someone who's decided to stake his, you know, reputation and his standing to be able to do this, because it is a, you know, there's so many risks, there's so many concerns, some level of fear and capitulation, but he's willing to do this now. So there has to be something in it for him, something in it for the businesses, something in it for BitPay, for them to be able to come together and add value to each other. Otherwise it wouldn't happen. It just wouldn't happen. Why would they waste their time and money doing that? So this is how we know, like, we have to not just follow their money, but we have to follow their intentions behind it. So yeah, and he said that he's able to do that as an elected state official, to decide that his office will accept Bitcoin without approval from the legislator or governor. Of course, that you know, I don't see how an elected official would just, you know, say, okay, I'm gonna do this without making sure that not only it's, number one, legal, number two, that it has some sort of support, from some of the stakeholders. Otherwise it's not going to last that long. So and it's not, you have to remember that they've been recently developing some sort of legislative framework as well for emerging technology, not just Bitcoin and cryptos, but for emerging technologies, and to have that across a wide range of industries. So we don't know how, like, we're not sure exactly how big or successful this will be, or whether it may be successful now, but it could fail, you know, later down the line. No one knows. But based on the information, the positive feedback received from small to medium-sized businesses, privately controlled companies, they are they're the ones pushing this as well. They say, we want this form, this makes sense to us, and they've come, sat down, talked it out, and they've come together and they say, hey, the worst that can happen, we tried this, it didn't work, we'll find another way that does work for us, that saves us time, money, and energy, and so on. And that's the crux of it, the risk to reward ratio and the value that each stakeholder gets out of implementing this, and the fact that have plans to eventually let residents to pay their Ohio tax return with Bitcoin. Now, you can, you know, think of the implications. If you're a miner, you can simply, you know, make sure it has to be viable, first of all, for you. But if mining for you is profitable, you end up paying your taxes via the profits you get from mining, then you're laughing. If you're trading, then you may be making losses, you may be making profit, but whatever strategies you implement, or if you're hodler, whatever you decide to do, when Ohio, if and when Ohio decides to extend this to resident, and if this idea extends to the rest of the 49 other states, and we see how in reality this may help to drive adoption. Because what it would do is, if cryptos are a stage in their life cycle where people see value, where instead of using fiat, they're using cryptos to pay their taxes, or pay bills or something like that, and they're able to find ways to capitalize and generate profits, and so on, that will be able to pay that, and then allow their fiat to accumulate in their bank, or add it to their 401k, or other insurance or retirement plans or whatnot. If there's ways that people can have any sort of value, and if this bears out, there's no guarantees obviously in this space, but if more and more people are willing to take that risk and spread the risk and diversify, and more importantly, in the, like, at the crux, the nucleus of this, if they get educated, and this is something that becomes more mature, I'm not sure about calling it less risky, but if more people are I think if more people are educated in the space on all levels, whether you're a business or individual, or even government departments, the more educated you are, and the more in tune and connected you are with what's happening on the ground, and that means sticking to different communities in the space, that you're more likely to be you're more likely to make decisions that are better informed and not, moving, not making decisions solely based on irrational moves and just based on your emotions. And so this is why with the Ohio tax payment development, this potentially could be a catalyst for other states to then say, hey, it's working in Ohio. We may start accepting tax payments with not only our businesses, but our citizens. And then that could lay the groundwork or be like a domino effect to other areas being adopted, being accepted, being tested, and so on. So that's what I find so fascinating about it. During this crazy bear market, we're still seeing that, there's these sort of conversations being had, these developments coming through. Now, not saying that this is going to end up making Bitcoin go, 20,000 and above and so on. I'm just saying at this point in time where we are, this is what's happening. And that before it happened, before it was announced, there was a great deal of consideration, feedback, input, planning, preparation, checking out the legal aspects, this and that. All sorts of consideration happening before they got to this state where they finally, the businesses are, as of today, allowed to post their taxes online using Bitcoin. And what was I going to say? So other states, Arizona, I know in Georgia, they had introduced tax bills, but they're either being delayed or I know in the Georgia, I think it died somewhere in the process, sadly enough. But it has to have a level of support and understanding and backing before you can get to the next part. But the fact that they've already started having these discussions and trying to pass these laws and bills and try and find ways to normalize this is something that I'm keeping my eyes peeled on. And and this is why we are seeing things go crazy right now in the market, but this is why it's important to just be fully, as best as you can, to be aware of what's happening, of what government's doing, what businesses are doing, what individuals are doing. Just keep an eye out on what they're doing as opposed to saying. And very quickly as well, with Bitcoin, sorry, on another matter, I wanted to quickly tell you in Malaysia, this is another thing I was really worried about, and I wanted to mention this part, that the Malaysia government, they said in order to introduce cryptos, they're going to have to, it has to go through a bank. It has to go through a bank. And I find that really ironic and really concerning, because the whole point is to be away from traditional institution. And the idea of distributed ledgers is to get away and have that decentralized and the power given back to the people. And this is something that I'm like, okay, that's not going to make any sense. It may work, but I just don't see how that's going to last, in my opinion. And regulators all over the world are still looking at cryptos with caution. Some of them are banning it, as we've seen. And so, but with Malaysia, the Bank Negara Malaysia, they're going to have to, anyone buying cryptos there will have to, it has to pass through this bank before being able to be used. And I find that absolutely ridiculous. And they're saying if you're trying to get crypto any other way, it's going to be illegal and there's going to be consequences for that. And I'm not liking that one bit. And that's what I was afraid, because if there's some sort of precedent having a country where one bank or several banks, that you have to get your cryptos through a bank, that defeats the whole purpose of acquiring cryptos in the first place, in my opinion. So the irony in that, the idea of a central authority taking over the regulation of a decentralized framework, that's crazy to me, personally speaking. Now, it may help to drive adoption, but that's not really the type of adoption that I think is good, overall. So we want to try and help the space, the community, to able to have more power, not less, and certainly, not being monitored and tracked by banks and governments. Every little move you make. And that could be used against you, God forbid, in the future, if you're an enemy of the state, or some other thing. If you acquired your riches legitimately, but you're too powerful because you're influencing other people, and you're helping them become wealthy, then you've got the spotlight on you, and then they're like, okay, we need to have policies and initiatives in place, so we did, too many people are not too wealthy and away. They just care about control at the end of the day, control and tax receipts. So yeah, I'll stop there for now, because I know I've been going on, but that's really important. I wanted to mention. But Aking, quickly, I know I've taken a lot of the time, but speak on the market and the charts real quick.
I'll give just a quick little outlook where I think what's happening here with Bitcoin is that, we fell really hard from that $6,000 range, and we hit that 3,500, 4,000, depending on which exchange or broker you're looking at. And, I still think that we should get some type of play in this range. I mean, just for it to just crash from here is just really hard to perceive. But if we start trading below 3,500, then we're going to start reaching lower prices, down to 3,000, 2,500, etc. But I would expect some type of dead cat bounce at least, a few hundred points at least, to get something. But there's really low volume, low interest, holiday seasons, stock is crashing. There's really not a lot of fundamental reasons for it to bounce. But anything that crashes this hard has to have some type of bounce somewhere. So
Okay.
Still the market just, very bearish. I think we could be here for a little bit of time. So with the prices that we're seeing, I'm a big, Bitcoin guy, so I would not advise again. I don't do any advisory, but if you were buying Bitcoin, dollar cost averaging, like these are really good prices. But at the same time, I could see $1,000, even sub $1,000 Bitcoin scenario occurring. But in the grand scheme of things, if you're a Bitcoin lover and you feel like Bitcoin's going to be 6 figures in the next 5 years, 7 figures in the next 20, then all this really doesn't matter. I mean, if you really think that, and I think within the next 5 to 10 years, we'll see a 6-figure Bitcoin. And I think within the next 20 to 25 years, we'll see a 7-figure Bitcoin. So in the grand scheme of things, it just all depends, how you see it. I know it's really hard to look at this, everything tanking and hold on to those beliefs. But this is what big boys and big girls are made of. Like, this is when you toe the line and really, stick to what you think, what you believe. So short term, we're selling. Long term, within the next 20, 25 years, I think Bitcoin and a few great alts have a real opportunity to do something special as far as the actual value versus the USD, outside of the functionality, outside of the technology, and so on and so forth. So my feelings about crypto hasn't changed. I mean, we went from zero to hero overnight. It felt like in 2017, and things are, correcting. And we're in a real bear market, a real bear cycle. So I don't see a reason to go crazy or feel different about crypto. We're just in a bear market. That's all I see. So the only thing I would say is just, stick to what you do. If you're dollar cost averaging, stick to what you're doing. If you're waiting for the bottom, stick to what you're doing. If you want to see Bitcoin back above 10,000 before you buy it again, stick to what you're doing. Like, whatever you're doing that makes sense to you, do it. But I wouldn't advise panicking though. I don't think prices reflect, the long-term outlook of where we're going to be in Bitcoin here. So I think that's a little shallow. even if you're against cryptocurrency or you feel like it's all just a joke, I just think that if you just take the snapshot of what price is doing right now as the opposite of what Bitcoin represents, I just think that's a little unfair. So yeah, I just think we're in a bear market. That's it.
Well said, because I know you've you felt like a broken record, and people are probably sick and tired of hearing the same old thing again and again. But again, it's part of the journey, isn't it? It's part of the process that we have to consider and be open to any possibilities. Like what was interesting is like when you kept saying why you were fascinated with how certain people just said it will never go to below 6,000, it'll never be this, it'll never be that. And those sort of absolute, like 100% belief, like something can never be done, like it's impossible to do this or do that. The fierceness and the language and the passion behind both sides, and is interesting, like how and then if it then does go to that level, it's like, oh my goodness, it's actually happened. And now you'll say, there's people that would say, oh, it'll never be this, it'll never be that. But the truth of the matter is that anything is possible. As much as a 6-7 figure Bitcoin is possible, a 3-digit Bitcoin, a 4-digit Bitcoin is possible too. So it really is to do with the mentality and the psychology behind this, and why, if we're motivated, depending on where the price of the Bitcoin of cryptos are right now. This is why there's certain people in the market that will be price sensitive and be driven by price, and it bears out in the stats as well. Different levels that they will decide to, despite their strategy, they will decide to quit. But there's others that have been so waiting. This is their Christmas, this is their Thanksgiving, their Cyber Monday, Black Friday, all rolled into one, and their birthday, and they're like deciding, you know what, I'm gonna accumulate, I'm gonna buy at this prime point. And there's some that'll be like, I don't care, I'm just gonna dollar cost average and see where this goes.
The thing is, I don't mean to interrupt you. The thing is that because I think, in just my opinion, that because the stock market isn't doing so well right now, particularly the technology sector, it's like cryptocurrencies is extremely speculative. So if Apple isn't doing well, those people that are invested in Apple, I'm not even talking like institutional investors. I'm just talking about regular people invest in Apple that have a little bit more money than the average bear. Maybe you can even call them institutional investors. They're not going to go from Apple to Bitcoin. So it's those people that we need their money in order to really push and drive Bitcoin. So in my view, until the stock market starts doing better, I don't think crypto is going to recover, because that's where people keep, their money. I mean, that's where they invest in. So it's not going to move in the stock market and experience pain there and then speculate in cryptocurrency. I just don't see that happening. So when I think that when the stock market starts to recover, and people are feeling comfortable and happy with their earnings and their profits, and things are going back smooth, they're going to start allocating some speculative investments towards Bitcoin. And then we'll start. And then I think that will really aid it. But right now, the market is just having a rough time. So I don't see anything happening in Bitcoin for the next year and a half, to be honest with you. I think we're going to have a nice long, bear cycle. And then when everyone's good and disgusted with it, I think
you said good and disgusted. It's like that real panic, fear, and
yeah, but I mean,
that despair.
It's no reason to panic or be fearful. I mean, it's just what it is. It's just a bear market. It's going to be over. And by the time you look at it back in 20 years, it's not even going to feel like it even existed. If you believe in technology. If you think it was just a bubble, then yeah, you're probably panicking. But if you believe in technology, I don't think there's nothing really to worry about. I just think we're going through a bear cycle and we'll be out. So
pretty much like you're recovering from a really bad hangover. Like you've had that bull run last year, and it's like a one big giant party. Hey, we're making the money, blah blah. You know, you're doing this and all sorts, and then you know, you just see the reality of it. You've got headache and, you know, all the symptoms of a hangover, and now you know, you will survive is what I'm trying to get at. You will, life goes on, the sun will come back up, as sure as the, you know, the night and the sun, and the earth will still rotate. You know, it's really not the end of the world. So, but you know, that people will make it out to be in the, like, the media is definitely gonna help to sensationalize and really stoke fears, and there will be continued price manipulation. But like you said, Aking, you know, this is just a bear market, and you know, just recognize it as such. So yeah, well said. And I'll definitely point out the fact that you have been calling these numbers, you know, beforehand as well. So that's something else. You know, obviously it's nothing to celebrate or anything like that. I'm not saying that. I'm just saying that you've been consistent in calling out the market, and yeah, kudos to you on that too.
appreciate it. I just want everybody to be in the know, you know, whether they agree, disagree, just to have a different perspective. So, but it's been fun. So I guess we'll catch each other next time.
Absolutely. Thanks for joining us, guys. See you Wednesday.
Later.